Hey guys, Raf here from the End Game Investor, and today I want to talk about a tug of war. Tug of war is going to be between the secured overnight financing market, which is basically the repo market between banks, and the reverse repo and the Treasury. Well, obviously, you can't have a tug of war between three parties, so one of those parties is going to drop out, and then you're going to have a tug of war between the Treasury market and the repo market. I'm going to show you what this tug of war is and how the New York Fed helped me figure it out. And those that are saying that when the reverse repos run out, nothing's going to happen, they're probably wrong. Are they for certain wrong? No, they're not for certain wrong, but they're probably wrong. I'll show you the graphs that show why they're probably wrong.
I'm gonna die now, probably. Man, I had you all over here for dinner. Fish tacos.
First, an important announcement to make the Endgame Investor is moving to Substack. You can find the Substack at endgameinvestor.substack.com. You can subscribe for free now. I got some fun stuff there. I'm putting my old humor articles up there. There's also some monetary philosophy going on there. I will be moving to Substack starting in January 2024, at which point you can subscribe to the Endgame Investor at Substack for as little as $20 a month or $200 a year. And I promise that if the Endgame hits and we hit hyperinflation, I won't raise prices to $2 million a year because I'll have enough from gold and silver anyway that I won't need to, and I'll just write basically for free. That is assuming Substack still exists and the internet's still up and all that other lovely stuff, which I have my doubts. But for now, let's talk about the tug of war when the reverse repos drop out. Okay, I got two tabs open here. This is from the New York Fed, libertystreeteconomics.newyorkfed.org. They even have like a subdomain. Look at that. The article was written December 19th, 2023, which is yesterday as I'm recording this, dropping like a stone. On RRP take-up in the second half of 2023 by Gara Alfonso, Marco Cipriani, and Gabriella Spada. They all sound Italian or something.
We'll make him an offer he can't refuse.
I was just gonna say that.
Okay, the only paragraph that's worth sharing here is this one. I'm going to read it. I'm going to show you the chart below. Consistent with a decrease in banks' balance sheet costs and an increase in the supply of bank debt, the interest rates at which banks and broker-dealers borrow via overnight Treasury-backed repos have increased since the fourth quarter of 2022 and are now a few basis points above the overnight reverse repo rate. See chart below. This positive rate differential pushes money market funds away from investing at the ONRRP facility, overnight reverse repo facility, and into private repos. Sorry if the sound quality wasn't so good at the beginning. I had the wrong microphone on. I think it's the right one now. So we have this chart going on right below, which is the SOFR-ONRRP spread has been positive. SOFR is the secured overnight financing rate minus the overnight reverse repo rate. The secured overnight financing rate is the repo market, and the reverse repo is the reverse repo rate, which is 5.3. That's an administered rate, whereas the secured overnight financing rate is market-based. And the SOFR, you might know, has replaced LIBOR as the basis for all derivative contracts in the world, which is like hundreds of quadrillions of dollars or whatever the number is, trillions, quadrillions, decillions, who cares? And we see here that the spread between the SOFR and the RRP is now positive, which means it's worth it for money market funds to not loan cash to the Fed through RRP, through reverse repos, and instead to loan cash to the repo market to other banks because they get more basis points out of that. The SOFR rate is 5.32, whereas the administered reverse repo rate is 5.30, and you'd rather have that 2 extra basis points. So the question is, why are there reverse repos at all? First of all, let's look at the secured overnight financing rate. I've showed this chart before, but we have increased take-up, increased volume, this black line, in secured overnight financing loans, which are basically repo loans. So we have increased demand there. And the average right now is about 1.7 trillion, and we have these spikes. And as I showed before, we tend to have spikes in the reverse repo rate, which is the blue line, at around the time when we see a spike in volume. We saw this at the end of 2018. And here in the Repocalypse, when we reached a peak here of 1.28 trillion, and then a few weeks later, we had the Repocalypse over here in the blue line spike. And so we're seeing a spike in volume, but not yet a spike in repo rates yet. So why are there reverse repos at all? Well, we have two markets that are competing for funds. We have the Treasury market, which is when the Treasury sells T-bills on the primary market. and market participants and money market funds invest in those. 1-month T-bills are now yielding 5.4%. Secured overnight financing market, meaning banks that need extra cash to settle their books for the day, that is 5.32%. And the money that is neither demanded by the Treasury nor by the overnight financing market by other banks, that leftover cash is lent to the Fed in reverse repos in exchange for 5.3%. So where has the reverse repo money been going? It's been going in two directions. In one direction, it goes to the Treasury, which sells debt and money market funds, invests in that debt and less in reverse repos. In the other direction, it's going to the repo market, to banks that need cash to settle their books. And it looks like more and more banks need cash to settle their books because the volume in the secured overnight financing market is rising now to 1.7, 1.8 trillion. So what happens when there's no more money in the reverse repo facility? That means that all of the extra cash is being lent to the repo market in the SOFR and to the Treasury in the Treasury bill market issuance. So when there is no more extra money, that means there is a tug of war between banks that need cash to settle their books for the day, they're cash short, and the Treasury, which demands more and more money to finance its debt and to bomb Ukraine or whatever else they're doing, and to bother me here in Israel by sending ships over and causing World War III and all the other stuff that they shouldn't be doing. So when this tug of war comes to a climax, one party loses, and it's always the repo market because the Treasury gets what the Treasury wants. And when the repo market loses and falls into the mud, that's when the Federal Reserve has to come in and provide the extra cash to the repo market so the banks don't go kaput. But just like this tug of war happened in September of 2019, it is going to happen again. And when it does, the Fed is going to step in and we will be in the final round of inflation, which will lead to the end game and save us all from World War III, which would be nice.
To prevent them from taking over other mine shaft space in order to breed more prodigiously than we do, thus knocking us out in superior numbers when we emerge. Mr. President, we must not allow a mine shaft.
This is Rafi, the Endgame Investor, reminding you to subscribe to the Substack, endgameinvestor.substack.com, for free to get my humor writings and my monetary philosophizing. And starting in January, you can get the Endgame Investor, a daily market commentary on gold and silver from an Austrian economics perspective. I will probably write there 3 to 4 times a week, as I currently do now. And those that subscribe from today on, from the publishing of this video, there will be a raffle to win something. I don't know what it will be yet, but I'm thinking it's not going to be this dodo that my daughter made because she likes it, but it'll be something else, maybe one of the silver coins that I got from maybe it'll be something else. And a reminder, you can also subscribe to my Patreon at patreon.com/endgameinvestor, where I go into a biblical perspective on what is going on in the money markets today. And this week, we're going to talk about the first silver stacker, Joseph, who stacked all of the silver in the entire Middle East after he took over the Egyptian government.